Hello guys and welcome to my channel. If today is the first time coming across my channel, kindly do me a favor to hit the subscribe button, put on notification bell so that anytime I post content like this, you'll be among the first to get notified. Before I proceed with today's teaching, because it's going to be on liquidity, and then if you are a new trader, you really need to understand this liquidity concept. Otherwise, you might be finding difficult making consistent profits either as a forex trader or a synthetic trader. So that aside, now, for those of you who have been in my DM asking for a mentorship, or you want somebody to guide you, or based on the price in the previous strategy, millionaire strategy, now I'm going to run a 60 days mini mentorship on forex and synthetic indices. This mentorship doesn't necessarily mean you use your mobile indicator. This is not a mobile indicator class. This is where we talk about how price moves, what price does, how you can take your entry. Exactly things you should know. What these are things I'm going to be explaining in the mentorship class, and also I'm going to provide you with some materials as guide, videos, and some other softwares as guide to enhance this teaching so that you'll be able to uh, start trading fast as possible and doing it the right way. Exactly. So if you're interested, there's my WhatsApp number. You can message me or you can check the description below to confirm if this WhatsApp number and the one in the description below are the same. Please make sure you chat me directly. Any number chatting you or making comments in the comment section, kindly avoid. Once you notice I'm not the one, kindly avoid such people so that you don't fall for scam. Is that clear? So when you chat me up, then I'll tell you the necessary things to do and how we can start the training as fast as possible. It doesn't matter at the point you're watching this video, in as much as you can still communicate me on WhatsApp. That doesn't stop anything. Is that clear? Now, let's get into today's activity. Today, we'll be talking about liquidity. Liquidity is one of the major concepts in the forex market, which every beginner must understand before you can be profitable in this your trading journey. That means for you to be a profitable trader, liquidity is one of the concepts that you must have a deep knowledge about before, or which can make you a consistent profit uh, every single day, or depending on the method of trading you apply. Now, what is liquidity? Liquidity is the only driving force of the market. Without liquidity, the market will not move. So liquidity is money. That means if there's no buying and selling, there can never be movement of price until a party initiates a buy order while the other party initiates a sell order. Liquidity won't take effect. In a nutshell, you that is participating in any trading activity, you are also putting liquidity inside the market. So if you are buying, you are putting liquidity. If you are selling, you are also putting liquidity. And what is this liquidity? Liquidity is the money. Money we use. But majority of the traders out there are real estate traders. And in the forex market, we have the people we call the key players or the market movers. So these market movers are the one who hunt your areas of liquidity. Exactly. So if they want price to stop buying, they know how to put or how to do it. They know how to initiate the move in the market whereby price will not buy anymore. Price will rather be selling. And if price is selling, they know how to initiate the move in the market to change the direction of price. So as a new trader, it is better to know when these people are initiating or trying to initiate this move, how you can stay off so that they won't use you as part of liquidity to decide the direction of the market. Don't worry, when I start explaining in details and taking into the chart and giving you examples, the definition and the explanation will be very clear. Is that clear? So now they say types of liquidity, but have it in the back of your mind before I proceed that liquidity is what? Money. Just like before now, where cars are mainly using fuel for movement purpose, if there is no fuel in your car, that car can't move from point A to point B. Now, if there is no money or liquidity in the market, price can't move from a particular point to another point. Is that clear? Types of liquidity. We have two major types of liquidity, but in some other books you must have read about or some other videos you must have watched, they only told you they have buy side and sell side. It is not lie, they are part of liquidity, but this buy side liquidity and sell side falls under the external liquidity. So if we are to divide or talk about the types of liquidity, we have external liquidity and internal liquidity. So it is under this external liquidity that we have the buy side sell buy stop liquidity, sell stop liquidity. Is that clear? Buy stop liquidity and sell stop liquidity. So in the internal liquidity, we have the fair value gap. I'm going to explain to you bit by bit. So please don't skip this video. Just watch it from the starting to the end so that you'll be able to have deep understanding of what liquidity is all about. Then we proceed further to say what is buy stop liquidity and sell stop liquidity. Now, in the definition of buy stop liquidity, it occurs when stop losses orders for sell. Now, here they say the stop losses order for sell position are triggered after the buy stop liquidity is taken. The market often reverses to the downside. This happens because banks and large institutions use this liquidity from these buy stops to place their sell order. I told you initially that despite that everybody is trading the market, the forex market, we still have people who decide where the price goes to. So for these people now to decide where this price go to, they create a kind of liquidity in the market. They initiate this liquidity in the market, and when you fall into this trap, now they use it to change the direction of the entire market. Are you getting it now? They use this either the stop side liquidity, buy stop liquidity or sell stop liquidity, whichever one it is. They use it to divert the entire movement of the price in the market as a trader, because you and I are the retail trader. Why they are more, they are more or less, they are institution. In fact, they are institution on their own. They decide what and how the price moves. So now we proceed to, when analyzing buy stop liquidity, focus on these critical levels. Now these are levels where you can be hoping to see them taking actions, right? Now that means if you want to sell, before you sell, there's possibility that these people might put liquidity in areas like this. So it is these areas that you are going to pay attention to more, for you to know when the liquidity is off before you take your own entry. Is that clear? Before you decide to join the move. Otherwise, if you join before they take out the liquidity, automatically you are going to be used as part of the liquidity. That means immediately you are buying and then want to decide to change the trend to sell, and you buy before they clear liquidity, automatically you'll be used to clear liquidity. That is why you place trade sometime before you just say A, your price have hit your stop loss, and then you are out already before price starts going to exactly the area you predicted. When this happens, it means that they have used you as part of the liquidity. Is that clear? Now, before I go to the chart, start drawing other things, let's proceed further. So, for a buy stop liquidity, these are areas you should focus on every single day, every single week, every single month, so that you don't join or you are not used as part of liquidity. These levels are commonly targeted areas for liquidity in the market. We are told now that for buy stop liquidity, these are areas that are targeted. We are going to be seeing them in the chart as I proceed. Please make sure you don't skip this video, because it is very important for you as a beginner or even a trader who has been trading for a while but still yet you are not trading, you are not making profit consistently. So these levels are commonly triggered, are targeted areas for liquidity in the market. Now let's move to stop or sell stop liquidity. Sell stop liquidity is generated by the stop losses order placed on buy position when this stop sell stop liquidity is activated, the market often reverses to the upside. This happens because banks and large institutions use the liquidity from this sell stop to execute their buy orders. Is that clear? Now, you may not, with the definition, it might not be that clear. Don't worry. I'm going to do justice to the explanation when I get to the drawing chart. But for now, just know that the stop, the sell stop liquidity is triggered for buying, while the buy stop liquidity is triggered for selling. Have it in your mind that this is a two different activities in a two different opposite direction. To sell, to sell, stop as in sorry, to buy order. Okay, to sell, identify stop, sell stop liquidity. Pay attention to this key level. I think there's a mistake here. It means it should be to buy. Identify the stop, sell stop liquidity. Pay attention to this key level. Previous month low, previous week low, then previous day low. Low of the day, swing low, equal lows or support levels. Now, before I proceed with the external liquidity, internal liquidity, let us do justice to this concept. First, you understand what liquidity is, and we have been told that we have two types of liquidity, which are the external and the internal liquidity. Then, under this external liquidity, we have the buy stop liquidity, the sell stop liquidity, the sell stop liquidity, and the buy stop liquidity. Then we've also talked about the definition. Now, let me in the drawing aspects, let me explain that buy stop liquidity for you. When they say buy stop liquidity, we are told that for price for a sell order, that means when you are placing a sell, the areas where you put your stop loss, the move that activates that stop loss or that clears it and before price start going down is a buy stop liquidity. Let me give you an instance. Let's say let's start with the areas of interest that they talked about. Let's say this is our chart. We have our chart separator. Please pay attention. I think this is where you're going to get it more clearer. As at yesterday, right? As at yesterday, price was busy buying. That means there was a kind of up move, right? Price was giving you series of highs yesterday, right? I'm just giving you an example of how the price normally moves, right? So price got to this area, and this is where price stopped as at yesterday. Let's change let's do some changes of settings. So as at today now, this area is going to be highlighted as the previous day high. Let's use the previous day high. Let's start with the previous day high. Is that clear? Let's start with the previous day high. So as at today, you notice that price from this point, price dropped, right? Immediately price dropped and closed below the previous low, which is this point here. Here, automatically there's going to be a break of structure. You should know that. If you've not getting to that level, don't worry, maybe as time goes on, I'm going to create another video explaining that. And immediately price breaks below this, it is an indication that price has changed from bullish move to bearish move, right? That is what it implies, that price has changed from bullish move to bearish move. And we are told that our areas of buy stop liquidity are always at the previous day high, previous week high, previous month high. Now these are areas where we can easily say these areas are areas of liquidity where price can manipulate the moves, right? That means if they want to change move, into sell or into a probably a sell move, that means dropping, these are areas they can easily do what? Manipulate it. Now we notice that in the following day, which is today now, because price has crossed to the second day, price broke structure as at today. Now this is where most of the new traders get it wrong. Immediately they notice price has created a kind of heavy move towards the downside. This is where some of them start placing their sell. Some will just place their sell and then they will put their stop loss at this high here, believing that price will not come there again, right? Believing that price will not come to that high again. Then they start pumping different orders into the market, right? They start pumping orders into the market. In fact, some can even go as far as using sell limit. Are you getting it now? They go as far as using sell limit. They place a sell, then they place an order. Immediately they notice this break of structure. Now they have this mindset that okay, since there's a break of structure, automatically this high has become uh, this high has become an area of interest, either a supply zone or a bearish order block, right? That is the mindset. So they start pumping in their sell limit at this zone, having that belief that when price comes up, having that belief that when price comes up, price you just mitigate that supply zone or that bearish order block, and price will start what? Dropping all the way down. But forgetting that they are told that before price will start moving down, price has to do what? Take out the liquidity, because this high here, that is previous day high, is an area of liquidity. The fact that price has broken structure automatically signifies that the trend has changed to bearish. Fine. But the question now is, has price cleared the liquidity for that day? If no, then you need to be very careful before you either place your stop loss, your sell limit, or before you start placing orders immediately. So when price comes in here, they have the belief that immediately it activates their sell limit. That means it trigger the sell limit, then price will start what? Dropping. Now their stop losses are resting few pips above here. Now see what price is going to do. This is where those people, the market makers comes in. They will push price above that point, go deep, right? Price will go deep after clearing all their stop losses, both those who took straight order and those who took sell limit order. Price has activated the sell limit. Now price will trigger the stop loss. Then in some cases it will close back inside that supply zone or bearish order block. And the next thing you now see price do, price will now come and start moving down. Now, why did they say that this area is called the buy stop uh, liquidity? The move that went to trigger that stop losses, right? The move that went to trigger those stop losses is a buy move, right? So that is why it's called buy stop liquidity. That means the buy move will trigger their sell stop losses, then it will now start moving down. So when the question will come to your mind, why is it that it is a buy stop? Why don't they say sell stop? Because price stop what price stop selling and came to no, it is a buy that stop after triggering those liquidity those stop losses. It was a buy move that went to trigger those stop losses before it started dropping. So that is why it is called a buy stop liquidity, meaning that this move went all the way after activating all those stop losses from there. After clearing them, then it now started going down. Is that clear? So by now you should know that any day before you take your trade, immediately you notice a change in price direction or a change in character, you should watch, has liquidity been taken out? If liquidity is not taken out, then you need to be very careful how you open your order, because if price will definitely go down, then it will come all the way there to what? To activate their what? To activate those stop losses, and after it wipes it out, it will now proceed towards the downside. Is that clear? So that is for the buy stop liquidity. Now for the sell stop liquidity, we are going to also talk about that one before I proceed further. Now for the sell stop liquidity, it is a different scenario. I'm still going to demarcate the chart into two, like I did for the other side. So let's say this was yesterday's, this chart here was yesterday's activity, and the other side here is the activity for today. Now for today's activity, talking about the sell stop liquidity, this is what happened here. Now, as at yesterday, right, we had series of move towards the downside. That means price was busy dropping drastically, right? Price made a pullback, keep dropping, creating lower lows all the way to the downside, right? Price keep dropping all the way to the downside. And this was where price got to as at yesterday, breaking series of structure towards the downside. Now, as at today now, here becomes our previous day low. Now, initially we talked about the previous day high for stop buy stop liquidity. Now we are talking about sell stop liquidity. So we'll be talking about the previous day low, previous week low, previous month low. These are areas where our sell stop will be activating our orders, our stop losses, then to decide an opposite direction move. Is that clear? These are areas where price will be activating our stop losses and then make a direct and opposite move. So here becomes our previous day low, right? Then as at today, what happens as at today? So when price got here as at yesterday, price moved up, right? It moved up, came down, right? Then moved up again, and what it created the break of structure, right? That is a buy BOS. Now, immediately people notice this move, they start pumping their buy limit at this or place, this point here. Immediately they start pumping their buy limit here, right? They start pumping their buy limit here. While some who doesn't understand market structure will automatically start taking buy position immediately. They will start placing their buy position immediately because all they know is price is moving. They are seeing series of bullish candle towards the upside. So they start pumping in their what buy. Oh, price is going up. You see, yesterday price said so today definitely price will be going up, and they don't know that price doesn't move that way. So now what is going to happen for those who put sell limit? Those ones have knowledge of what price structure is or market structure is, but they forget to add the other following concept, which is the liquidity concept, right? And this is where most of you are being trapped. So since they know that price will come here and it will start going up, now they believe immediately price taps into this one, price will do what? Price will start buying, right? They believe that is their own way of belief. So what happened next? Price came down to that point, activated their buy limit, right? Activated their buy limit, and the next thing, already their stop losses is around this area, right? Their stop losses, this was the swing low. Their stop losses is few pips below there. Those who used to make their stop losses very tight. So believing our price will not come to that zone. And what happened next? Price breakthrough, right? It break through, in fact, came back with a wick and closed exactly at their distance after taking them out. And what do you notice next? Price will start doing what? Making move towards the upside. You get it now. Price will start making the move towards the upside. Now they get furious that it's as if these people are winch hunting me. Why is it that anytime I place my trade, that is when they come, then they deactivate me out of the trade, then they start. It's not their fault because you're already told that if price is definitely going to respond to this change of character here, then price has to do what? Take out liquidity. But from your own end, price didn't take out liquidity. You entered immediately or you place your stop your buy limit when price has not cleared liquidity for that day. So that was why price used them as part of the liquidity and then trigger the move towards the upside. So the move now that came to take out this liquidity is this move, right? This was the move that came to sweep that liquidity resting here. So it is a sell what? It is a sell stop liquidity. It is a sell side or sell stop liquidity that came to what? Take out that stop losses that was resting at this zone. So that is why we are told that sell stop liquidity will trigger the stop losses, then move towards the upside. Why buy stop liquidity will trigger the move and then take a move towards the downside. So it is the move that want to trigger those liquidity that we are naming the types of liquidity after. Is that clear? So when you hear sell stop liquidity, it is selling you the liquidity, the move that took out your buy stop or your sell limit after putting your sell limit, the place you put your stop losses for buy position. The move that take it is a sell move. That means it was a downward move that came to trigger that liquidity before price started going towards the opposite direction. So that is how we come about this stop, sell stop liquidity and buy stop liquidity, or buy side liquidity, sell side liquidity. Whichever one you must have heard about, these are the moves that triggered those um, uh, moves. These are the opposite moves are the one that triggered those liquidity before price started moving on the uh, expected direction. So this is what that sell side and buy side liquidity is all about. So I believe by now you shouldn't be finding difficult when you want to take your buy side or your sell side trade. So there are things you should consider after you understand the structure of the market. The next question is, has price taken liquidity? Now this liquidity can also be resting in your season um, highs and lows. Is that clear? It can also be resting in your season's high. That means, in the forex market, we have different season or sections. We have the New York section, we have the London section, we have the Asian section. So these areas also can also be area of liquidity, which price can just come, trigger the liquidity. Because if it is based on, let's say you are the person who normally trade the the New York section. For those of us in Nigeria here, New York section normally takes or starts around 3 p.m. Right? Now, let me give you a scenario where the New York section can come. Now, this is your chart for the day. This is the chart separator, right? The last section that will launch you into the new day section is the New York section from the previous day. This is the New York section that normally launch you into the uh, new days section. Now, price was busy as at yesterday. I want to just give you an explanation based on the section. So as at yesterday, or let's even start with today. So let's say early this morning or as early hour of today, which is the Asian section, the Tokyo section, price was busy making series of high, right? Price was busy making series of high between the Tokyo and the Sydney section. Price was busy making series of high. Then around 10, around 10, this was the highest point for this was the highest point price got to in the Asian section, right? In the Asian section. So price started dropping all the way down. This was the highest point price got to in the Asian section. So price started dropping down like this. Then break structure here. Then as at this point, the New York section has started. So let's say the New York section started here. Don't forget that this high and this low, this high and this low This low here is the what? Is the Asian section. Is the Asian section, right? So if price is definitely going to start selling all the way down in the London section, then this is what we want to see. Since price has breaking structure in the Asian section before the London section starts, right? Before the London section starts. So we want to see price because automatically when there's a break of structure, then we have our supply zone here or our uh, other block around that area. So if price is going to continue to sell, then we want to see a move like this in our London section, right? In our London section, we want to see price taking out this liquid. Sorry, we want to see price taking out the Asian high. Immediately price take the Asian high, then close inside our bearish order block, right? Then we can then either initiate an order while we put our stop loss at the Asian high, which is this point. Then we target our TP will be around the expected TP should be around this zone, this low here, and the forecast or the extreme should be around the low of the Asian section, the low of the Asian section. So as a trader, now you'll be targeting here as your area of exit. Immediately price close, the London section opens, cleared liquidity, then came back and closed below the high of the Asian section. Then we then place our sell order. Then uh we'll target price to drop all the way to this point, right? So, and if it is the low that price cleared, then we'll be expecting a change in price structure or in the market structure while we anticipate for a buy move. Exactly. But in this case, it was the high that was cleared and price closed below it. Then we'll be anticipating for price to drop, right? Because already we have a change of character here already, telling us that price has changed from what bullish to bearish. Then the next thing is waiting for price to take out the high to clarify that yes, all those people who have put stop loss here initially, price has cleared them out. Then we can now anticipate to take the down direction. In fact, in some cases, some people will still want to see another confirmation of breaking structure. What do I mean by another confirmation? They want to see price give us another move, right? Without breaking that high. Then once it breaks below, creating another OB here. Now this is when they now pick interest in the move. So when price try to mitigate it, sorry, when price try to mitigate it next time, then they open their own order and then they start anticipating for them. So this is how, as a forex trader or a strategic trader, these are the ways you should be approaching the market, not the way you're approaching it based on your indicators, mobile indicators. No, those can't help you make consistent winning. So you see that liquidity is very important. That means to understand that concept is very important. Now let's go to live chart of any pair and let's see all these things and let's see if it's really making sense or not. Is that clear now? So let me take you to the chart. All right, this was okay. This is on boom and crash. This is crash 1000. Can we do any analysis here? Okay, today's weekend as at when I was making this video, so let's use this synthetic indices as an example. Just example, like I said. So as of today, for you to know your high, because your high and the low, except you are a good trader or you have been trading for a long time, you can easily identify them. But for those of you who can't easily identify them, now you can use the chart separator. That means you can see all these lines here. All these lines are the chart separator, separating each activity, yesterday activity from today's activity. So these are chart separator, right? Now, if you don't know how to do that, what you just do is go to your daily time frame. Now, this was the candle. This is the current candle now, right? So we are going to mark the high using our horizontal line to mark the high and the low of the previous candle, which is yesterday candle. You can see the way I'm doing it, right? So this candle here that close like this is the yesterday's activity. What it just tells you is that price buy up to this limit, but later on sellers try to push it, but it was more or less like an indecision candle. So that was what it implies. Now after marking the high and the low of that day, then you can now go to let's say your 1 hour or your 30 minutes. It depends on where you are doing your analysis from. Okay. Now let's use the 1 hour time frame, right? Let's use the 1 hour time frame. So you can see that this was yesterday's activity. Every activity right here are activity that took effect yesterday. Price as at the early hour of yesterday, price was buying. We have more of buying pressure, but at some point before the day closes, price started dropping again. That is what you saw on the D1. That is exactly what that D1 told you yesterday. So price was pushing up, then later on price started closing down. It's exactly where it started from, that is where it closed again. So it was more or less like the buyers try to push price up, sellers back aggressively push price all the way down. Just like the same way the buyers try to push price up. So yesterday activity stopped here. This was the lowest point and the highest point price got to, right? So we have been able to identify our high and low. So now based on what we are talking about liquidity, as of today, before you trade either buy or sell, for the sell, before you trade buy, we want to see a kind of move at the upside. But in this case, the move was not happening at the upside, rather it was at the what? Downside. Okay, if that is the case, it means that price did what? Price cleared today's liquidity, cleared previous day liquidity. That means it went below, took out all those. Not even only that, it break structure, right? There's difference between clearing of liquidity and breaking of structure. In this case, this was a total break in structure because this was the lowest point the price got to, and price closed massively with a what a full candle, a momentum candle, indicating that there was a pressure towards the downside. Right now, if that is the case, here becomes an area of sorry. If that is the case, here becomes an area of interest. Our BOS is here now. So this was the area we I don't know what is happening. Sorry. Our break of structure is here. So our supply zone, we can consider this area as our what? Supply zone. Right? Now, if we should go down to the lower time frame, we can keep modifying this zone. Now, what happened? Immediately price broke or took out that went below the previous day. Then if price is definitely going to start buying, what do we want to see? This was the highest point price got to. And this was the move that led to the what? Break of structure, or even if it is clearing of liquidity. Before you will consider taking buy now, you must wait for price. Since price have cleared liquidity, one, which is the first thing, you must wait for price to close above this point, this high. Then immediately price close above this high, then you'll be expecting a reversal move for price to create a bullish order block. Let's see this down part. Let me mark this part as if price close above there. This will now become our bullish order block. So we'll be expecting price to fall into this zone, right? When price fall into this zone, this is where you should be taking your buy. Already liquidity has been taken. Then your lowest point here should be where your stop loss will be, right? Then you'll be anticipating this point where price reverse from as your exit point. So this area should be your exit point, and this area, because we are trading within this range. But since price has not broken above this, I can still guarantee you that there's possibility price may still drop down, because if we should modify this break of structure down to the lower time frame, it might be price is trying to mitigate the lower time frame order block fully. before it goes. So these are areas where some people are being trapped. Now, when they start seeing this move, oh, maybe they say liquidity is around the previous day low and price has, so let me start buying. And when you open a buy order, price may just get close to this upside, and the next thing you just see a very massive drop that will come all the way down, because this is on a boomer crash, and this is where you kind of seeing a massive drop massively. So you need to have this concept understanding so that you know how you approach the market, not just approaching the market anyhow, so that you don't get what stocked out. So this is for the sell side liquidity, because the liquidity that is taken out from the previous day is what is a sell side. The move that came to take this liquidity here, let me clear it and show you well. The move that came to clear this liquidity, let's say this liquidity that was resting here, the move that came to clear the previous day low was what? A sell move. So that is why they call it, or they refer to it as sell stop liquidity. So it means that when the sell move cleared it up, the next move we start seeing is what? Buy move. But in the case of our instances where we have the buy side and the buy stop liquidity, then the scenario is different. Let me check if there's any move of such from other pair. Let me check crash 1000. Okay, this is on the daily time frame. So day two are still more or less like you can see now. Let me zoom out a bit. Yesterday high is this was the highest point of price got to yesterday, right? And then and this was the lowest point price got to yesterday. You can see it. So for those of you who don't understand trading, right? Probably you just woke up, open your chart, and start seeing all these move like this. Hey, price is buying, and you don't understand what price is doing. Or probably you are using an indicator which tells you that when this one crosses this one, you should open buy. So immediately you notice the cross in your chart. Price is buying. No, you open. Maybe you are not lucky enough. You open your buy at this point. Now imagine what will have happened to you. Price just cleared. It's just what's happened now is mean that price is just taking out yesterday's low. So until we kind of see some kind of move before we buy, as it is now, it is more or less an indecisive market, which means if you understand what price is doing, you shouldn't be opening any orders at this point. Is that clear? You shouldn't be doing what? Opening any position as at this point. So let me still check if I can get any pair that made move for sell today. But if I can't get, there's no problem. Let me check volatility 75. Sorry, this is the H1. Okay, all of them are still more or less like yesterday move. They are still clearing yesterday move. So let me check. I think we usually have step index. Okay, let me configure the charts. Now, good. Yes, we got the move here today. We got that move here. Now, as at yesterday, this was the highest point price got to. Right, this was the highest point price got to yesterday, because we are using based on the information we talked about. They told us areas where we should be inspecting sell side and buy side liquidity. So this was the area price got to yesterday. That is the highest point. Now, as at today, before you decide to buy or sell, it is in between these two regions. You know, I told you if you can't mark it like this, the reason why I was able to easily access it was because I have a chart separator. But if in your own case you don't have it, or you're using a mobile phone, the next thing you just go to your daily time frame, right? This was the previous day high candle. This very candle, this candle here. This was the previous day what candle, right? So you can use that. So now let's go back to the H1 where we are doing our analysis from. Now, as at yesterday, this was the highest point price go to, right? This was the highest point price got to, and this was the lowest point price got to. Immediately price came above this zone, crossed above the previous day high, right? Now, for you to get it appropriately, right? For you to get it appropriately, you have to go down to the lower time frame. you have to go down to the lower time frame. Let's come to the 15-minute time frame and see if we will have gotten a good opportunity to take a sell. Now, this is, yeah, let's, okay. So price broke through the previous day high, which is this one. Like I told you, this was the previous day high. Then as of today now, in your lower time frame, which is the 15-minute time frame, this was the last point, right? This was the last point that led to the break of structure, right? Or the last move that led to the break of that structure. Now, immediately price crossed or went below that point. Immediately price breaks below this point here, right? Then we assume there's a break. We believe that there's a break of structure. That means price has changed. Now, but this market didn't give you a kind of a pullback into that zone for you to take a sell order. So maybe probably in the 5-minute time frame, we will have gotten an opportunity to sell. Let's go to 5-minute time frame and see if we'll have gotten an opportunity to sell based on the analysis so far. All right. Okay, we'll have gotten an opportunity to sell. Now let me zoom out a bit and let me shift the charts. So price broke above the previous day low. The first break of structure, a very clear one, was around this zone, right? But our bearish order block would have been, this was the, after this pullback, so this was the move. We'll have probably said, okay, here should be our, we'll be expecting price to tap into that zone, but price didn't go there. But what next again? We notice that we had another pullback here, then price broke structure again, right? Then our other area of interest will have been this one. So we'll have gotten opportunity in this second leg, right? We'll have gotten an entry opportunity within the second leg, and then we'll have sell all the way down, right? We'll have taken a sell trade all the way down. But if you don't understand this concept of price taking out liquidity, price changing structures, how can you do all this? This is why some people miss trade and they keep losing back to back. So this is why you need a mentor to guide you, explain to you, show you, even provide you with the necessary tools for you to tackle trades like this. Is that clear? So that being said, I think we have been able to cover what the external side, that is part of the external liquidity. Now the internal liquidity is what? Let me show you the internal liquidity, or what the internal liquidity is all about. When you come to this section, when you come to this, you're still using this analysis, right? Let's still use this very one I use now. Now, you will notice that when price took out this high, your internal liquidity is, they said, is a fair value gap. And if we are to mark fair value gap, where there was fair value gap was this last candle here, and this candle here didn't have any intersection. Price didn't at any point connect them. So it shows that this is where we have our what? Our fair value gap. So if we are to take, if we are after taking out the external, our fair value gap, which is an internal liquidity, we expected price to fill up to this level, right? So this will have been, this range here will have been our internal liquidity, because after price take out the external liquidity, the internal liquidity will be the next place price will visit. Is that clear? So this movement will have been where we'll have focused on to what? See price close. So the gap between these two areas is the internal liquidity. So don't worry, in the next class I'll be talking about fair value gap. I will explain deeply on how we used to identify fair value gap or imbalance in the market. Is that clear? Please, if you find this video very interesting and educating, kindly give it a thumbs up. Make sure you subscribe, and don't forget that if you want to be a successful trader making profit consistently, then you need to join the mentorship class. Right? You need to join the mentorship class. Here is the contact WhatsApp number. On any topic, either or sorry, on any platform, either synthetic or the forex market, there is no way everything we are going to do justice to that. Exactly, guys. So please Make sure you share this video so that others will have opportunity to gain from this video. And if you want me to keep giving you videos like this, let me know in the comment section. Thanks for watching. See you in the next one.